Hello dear viewers, my name is Brecht Arnaert and today I will be talking to Mr. Mark Valek. Mr. Valek is the co-author of the Yearly in Gold We Trust report and co-founder of Incrementum, a Liechtenstein-based wealth management fund inspired by the Austrian School of Economics. Tomorrow he will deliver a talk on the possibilities of combining crypto and gold, but today he will give a short preview of that talk. Hello Mr. Valek and great to have you.
Hello, good to be here.
When I look at those two markets, the gold market and the crypto market, it appears to me that the analysis of the gold owners and the crypto owners about the financial system is quite similar. To your mind, can you see any connection between crypto and gold?
I think so. I think definitely when one talks about perhaps more specifically Bitcoin, which was obviously the mother or the father of the whole crypto sector, is the intention behind the creator or the creators was to provide some kind of alternative monetary system, perhaps even at the end of the day. So people who understand the monetary system and see it critically, like I do perhaps, and which like I would guess most gold owners also do, I think there is some common ground between people who think there may be a case for Bitcoin or something similar to Bitcoin, kind of as a digital gold, digital store of value. And so I think there is common ground, and that's a good starting point.
Yeah. And how do you see that practically? How can you combine the crypto sphere with gold? I believe there's already some product like that. I believe it's BitGold, who uses the blockchain ledger to allocate storage of gold. How does that work?
Right. I mean, one has to be careful when one talks about crypto. That's like a really broad field. So Bitcoin, BitGold, which I think you're referring to, is now again called Gold Money, if that's
yes, of course,
the company
yes.
You're thinking of. And yeah, their idea was, well, I don't want to go too much into that idea, but there are many ideas which think of combining gold with the blockchain technology. Let's leave it there. And I think could be quite an interesting symbiosis at the end of the day. But I think it's important. What I like about this whole development is that people, especially younger people perhaps coming from the crypto side, get some kind of an exposure to the monetary system, critical view on the monetary system, and they're actually propelled to think about what is the status quo in terms of monetary system. And that's a very, very positive thing. When I was like doing this already 10 years ago, more or less the same, gold bugs were pretty much on their own back then. And now I think
second crowd coming in.
Exactly. There's some kind of alliance forming. You've got different views within the gold community regarding crypto, or Bitcoin, rather say Bitcoin, and Bitcoin community regarding gold. But most of the time you have productive interactions in terms of ideas, and that's a good thing.
Yeah, what I do observe is that it's not both ways. For instance, with Macrotrends, we advise to buy Monero, which is a more anonymous currency than Bitcoin, to my mind, at 60 cents. And we maxed out at 300 euros, which is very nice. But what you see then is that people go to gold to consolidate that wealth. But you don't see the other way around. So people who have made money in gold don't trust crypto. They don't go to crypto. Is that your experience as well? Or?
I think so, but I think that's a little bit of one of the problems is probably that the time scale which we're looking at is pretty short due to the short track record of crypto existence. Yeah. So like most of the time, Bitcoin holders would have been off better if they have, especially if they were in pretty early. So that was a really good thing. And during the time Bitcoin was around, gold really didn't do anything. In fact, so that's actually something I'm going to talk about tomorrow, combining gold and potentially Bitcoin to kind of smooth out potential returns We think that that may be a very elegant way to reduce the overall volatility of a portfolio and provide some kind of an alternative to fiat money investments between gold and Bitcoin and get a better overall risk
so balancing
return.
of the portfolio using crypto when gold is high, and then
Exactly. So the buzzword, or actually the way to do it, or the way we propose doing it, is via a rule-based rebalancing. So what does this mean? One defines some kind of strategic asset allocations between these two assets
beforehand. Rule-based. So
Exactly.
there's no emotion. This is what happens.
Right. Yeah. Very important point. What we looked at all kind of proportions, but what we're looking as an interesting proportion is like 70% gold and 30% Bitcoin. So
in the whole portfolio, or
only with the strategy, right? And leaving enough room for the Bitcoin allocation to move up.
Sorry to interrupt.
Yeah, that's good.
But are you telling me this is a dedicated portfolio to that pair, or are you saying that in any portfolio we should have 70% gold?
No way.
Just to.
No, you're right. I wouldn't advise that. So that's just like as if you see this, I would see it like a building block for assets. Away from the fiat money system. Yeah. So you don't have much options, like if you want like alternative money like gold or potentially Bitcoin, which perhaps is more alternative store of wealth like gold is.
Yeah. Okay, very interesting. And have you taken any measures already to make a product out of this? This idea?
Yeah, we've been lucky that we are in Liechtenstein, because Liechtenstein just happened to be...
There's a hub there of people who are crypto-minded.
Exactly. Yeah, it has exactly become that. It has become a hub for crypto companies. I mean, it's not the only one, obviously. I mean, Zug is pretty close also in Switzerland, and it's still bigger, but there's quite a lot going on in Liechtenstein as well. And also the legislation there embraced the topic. So I had an interview, we write the crypto research report. I had an interview with the Prime Minister of Liechtenstein, who completely embraced the crypto topic, and they actually started their own legislative. It's called the blockchain Gesetz, the special law.
That's good.
Which clarifies all kind of legal things when it comes to the transfer of right. So you have better security, legal security, and so on. And we are also able to launch a regulated fund.
Okay. So people could participate in the fund, profit from the strategy without having to do the work.
Exactly, that's the idea.
And how far are you with this fund?
We are starting in the next months. So we are just like talking to the biggest investors now, and we've got so far quite good feedback, and that's really exciting for us.
Yeah. But that would be a privately noted fund. It's not on a stock exchange.
Well, it's not an exchange traded fund.
Yes, that's what I mean.
But it can be bought or sold basically on a weekly basis.
Okay. Yes, and it would be a dividend kind of thing, or would people buy this to profit from the plus value like normal stocks, or what would be the...
Well, it's interesting that you bring that up. I mean, as you well know, but I think it's important to just emphasize, gold doesn't pay interest or dividends. Obviously, Bitcoin neither. So basically, the idea behind this is that gold will obviously regain a more important status within the monetary system again. So as you can't print gold, but you can print fiat money, and it is being printed really fast. That's basically the reason why it's also been rising over the last decades, gold. Perhaps not the last years, but over the last decades, gold clearly rose always, denominated in inflating fiat money. And the same idea is for Bitcoin. So you don't gain via dividends, but you gain via appreciation.
Well, maybe you do because, for instance, you have Keith Weiner doing the same in monetary metals. He's trading the GSR, the gold silver ratio. When gold goes up, he sells it and buys silver, and then the other way around. So then you can have on such a fund, you can have a dividend.
Yeah, if you want to call it like that.
Yeah.
Yeah.
Well, yes, or he calls it interest, but I believe interest is only on debt. But that would be the idea, because that is your idea as well, no? Like when gold goes up, we sell a bit of gold and we put it in crypto and vice versa.
Exactly.
So then you outsmart the market and then you get an extra gain that you can pay out, I would say.
Yeah, and I think one of my mentors from the asset management scene, it's not a very well-known guy, but I respect him a lot, and it's not only his saying, but what I learned is he's like, there is no free lunch, we all know that, but the only free lunch may be diversification. So if you diversify between two, in this case, two different basically assets, which in this case, and that makes it very interesting for me, are not correlated at all, basically. Different thing between silver and gold, obviously, plus have a huge differential in their volatility, meaning gold generally doing not that much relatively, especially to Bitcoin. So once Bitcoin rises, you really have a move in the portfolio balance, and then it makes sense to take off money off the table and sell into strengths.
Wow.